But what they're trying to do, I believe, is to massively debase the dollar, to shed the reserve status, to bring back manufacturing. And the only way you do it is link the back end of the bond market to gold. Now, Van Eck came out and just said that if they do indeed, the base case would be 39,000, and they're just using M0 money, which is the,
right.
This is the foundation of everything else that is the money supply. And if it goes up to global M2, they're talking about the price of gold going up to 184,000. Now, this isn't someone in this industry. This is Van Eck saying it.
Even at today's price, it's the most undervalued financial asset of all time. And my bottom target right now is $650 an ounce. Could be potentially way more than that. This isn't even the beginning of where we're eventually going to go in my perspective.
In January 2026, the precious metals market is hitting a perfect storm. Gold has surged past $4,800, with major institutions like Bank of America now forecasting a climb to $6,000 by spring. Meanwhile, silver has rocketed over 35% in just the first 20 days of the year, driven by a massive physical run and structural supply deficits. Industry expert Andy Schectman argues we are witnessing the death of paper price manipulation as sophisticated traders demand physical delivery at record-breaking levels. He explains how massive deliveries on the COMEX, the largest for silver since 1974, signal a shift toward real price discovery. Schectman suggests this could be part of a strategic plan to debase the dollar and peg bonds to gold. Could these historic delivery numbers be the final signal that the current financial system is about to break? Watch to find out. But before that, don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
I think the real question is, what is the fair price of gold and silver, two assets that have never been allowed to find price discovery? And I would say the institutions closest to the metal are prioritizing control of deliverable gold and silver rather than promises of future availability. And, I think that there's a realization that this game that has been played by the West of holding down the paper price of gold and silver, both for distinctly separate reasons, is coming to an end now, because what you are seeing is insanely large deliveries, whether it be off of the LBMA or into or off of the COMEX. The December delivery month, as an example, for gold, we saw about 68 million ounces delivered, the largest December ever for silver, ever in the history of the COMEX since 1974. 4 or 5 million ounces of gold as well. You're talking billions and billions and billions of dollars, but this is happening every single month since a year ago, November, when he won the election. And you look at what's happened just in the few days since in the January deliveries, which is not a primary delivery month, and we've already seen north of 40 million ounces of silver delivered again. So in the last 40 days, you're already, and there's still another 10 days plus to go, we're already at 110, 115 million ounces of silver delivered to COMEX, and somewhere in the neighborhood of 5-6 million ounces of gold delivered. And so the question really is, who's doing it? And at that level, I would argue these people don't do it just for the hell of it. So yes, I do think it can go, and I do think that none of us know where it stops, only because it's never been allowed to find, they have never been allowed to find real price discovery. Well, again, I would just say, where is real price discovery? I mean, you look at, to me, when you take a look at who's been buying the gold for the past several years, it's been the most well-informed traders in the world. The central banks, forget about how much money they have. They have more than anyone, but they know the playbook. What is unusual is to see the same thing happening here in the United States with the most sophisticated traders on the planet on Wall Street that are bringing in billions upon billions upon billions upon billions every single month. I think you could argue, I could argue, that this is actually a plan, that they are trying to do this. And I know that sounds crazy, but it has been my feeling for a very long time that there's an economic theory called Triffin's dilemma, Vice President Vance has talked about it. The previous economic advisor, the real knucklehead that he was, Jared Bernstein, did write a report called Dethrone King Dollar. Both Vance and Bernstein advocate for losing the reserve status. That is a privilege we can no longer afford. And, you got the fund Van Eck, the fund group Van Eck, who just came out talking about if the dollar really does lose reserve status, which I think it will. Honest to God, I believe they want to soft default on the reserve status to peg the back end of the bond market with gold, using the Genius Act, all of this together. If I were to go through the whole thing with you, it'd take 5 minutes, but what they're trying to do, I believe, is to massively debase the dollar, to shed the reserve status, to bring back manufacturing. And the only way you do it is link the back end of the bond market to gold. Now, Van Eck came out and just said that if they do indeed, the base case would be 39,000, and they're just using M0 money, which is the, this is the foundation of everything else that is the money supply. And if it goes up to global M2, they're talking about the price of gold going up to 184,000. Now, this isn't someone in this industry. This is Van Eck saying it, and their bond team saying it. So how high can it go? I guess we will see. What I have learned, Paul, in this industry is that bull markets go higher than anyone ever thinks possible.
Behind the curtain of stabilizing markets, a massive deception campaign is hiding the truth about the global debt bubble. While the mainstream media tells you where to look, the debt market is fueling a monstrous explosion that will eventually force a return to physical assets. The system relies on paralyzing the public with fear. But the shift toward a 1-to-1 gold to Dow ratio is becoming an inevitable reality as the currency devalues. Gregory Mannarino breaks down why he refuses to touch paper derivative contracts, calling them nonsense compared to holding physical metal. He argues that silver remains the most undervalued financial asset in history and warns that the U.S. has devolved into a debt expansion empire that can only survive through artificial rate suppression. Mannarino's message is simple. Don't wait for the perfect pullback in a rigged game. Get out of the system before the debt market implodes. Now, let's hear directly from Gregory Mannarino.
This isn't even the beginning of where we're eventually going to go in my perspective. I have targets here. I've been speaking about my targets for years. I'm very open on how I believe the price action of gold and silver is going to play out. It all is based upon what I look at is the inevitable 1-to-1 ratio, which will eventually achieve, or a 2-to-1 favoring gold ratio, the gold Dow ratio at one point here, and that's really that's where we're going to see the movement. It's all going to happen at a point where the debt market implodes on itself, and that is going to occur. It's the most monstrous bubble in the history of the world, and it's being fueled with an enormous amount of ferocity right now. There's a massive deception campaign going on in the United States. Look here, don't look over there, don't pay attention to what's actually going on. But I think that the people that follow our work are well-versed in silver, gold, the importance of having these assets in your possession as opposed to paper derivative contracts, futures contracts, all that nonsense, and I don't want anything to do with it. I don't own a single paper contract. I have traded them in the past. This is pretty much common knowledge. But as for owning this stuff long term, I want nothing to do with it at all. Despite the fact that people have made, probably incredible gains in the paper derivatives market, but I have no interest in it at all. So yeah, this is interesting. The move price action here of silver, gold, silver more specifically. But we haven't seen anything yet. This isn't even the beginning, in my view. People get caught up in a paradigm. It's very difficult for them to reason their way out of it when they've been conditioned into it. This kind of a thing is ancient. It's the mechanism, it's the system, how it preys on people and keeps them in a state of fear. Fear is paralyzing, and I think we all know that. It's interesting that you brought this up. Just 2 days ago, I was talking to a very good friend of mine who had a few dollars laying around at the time, and silver was $8. And I said to him, I said, what are you going to do with all this cash you have laying around? He goes, I'm really not sure what to do with it. What would you do with it? I said, I'd go out there and whatever I had, I said, I'd go buy silver right now. He didn't buy a single ounce. And he went back, and this is just 2 days ago. He's like, Greg, I could kick myself for not listening to you back then. This was $8. Incredible. And then when it hit 14, we had the same conversation, and he was still mulling it around if I should do it, if it's too late. And I get the same thing now as you probably do as well. People every day, they write to me, Greg, should I buy? Should I buy? Should I wait for a pullback? My answer is buy. Wait for a pullback for what? It may move around a little bit. Of course, it's going to. Trying to pinpoint that, I mean, you gotta be nuts. I don't play that game, and no one should be playing that kind of a game. I still feel, even at today's price, it's the most undervalued financial asset of all time, and my bottom target right now is $650 an ounce. Could be potentially way more than that, depending on, again, what happens in the debt market, which people are finally realizing, I think, at least I hope so, more and more, at least those that follow our work, that the United States has devolved into a debt expansion empire on a scale that no one can actually get their head around. It's an incredible thing. Although you and I have been saying this would happen for the longest time, it's not done. It can only function by expanding the debt, by devaluing the currency on the back of artificially suppressed rates. That mechanism is not going to stop.
Ultimately, Schectman and Mannarino agree that the current economic paradigm is a debt expansion empire nearing its breaking point. They emphasize that the only way to escape the paralyzing fear of the coming debt implosion is to abandon paper derivatives and secure physical assets. As global institutions quietly prioritize deliverable metal over promises, the opportunity for true price discovery is finally at hand. Don't let the noise of state capitalism distract you. The transition to a gold-backed reality is no longer a theory, it's a necessity. Share your thoughts in the comments section below. If you found their breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.